Good morning, it's John Moussea. It is Thursday, July 2nd, just before afternoon. We had a very good jobs number today. We saw the unemployment rate go down to 11.1%. That is lower than expected. We saw new jobs created, almost 5 million, higher than expected. Important to keep this in perspective, as at the end of last April, the number was negative 20 million, and the unemployment was about 15% and was probably very understated. So real progress made. What did it mean to the bond market? Bond market this week really did not much of anything. The 10-year bond is maybe higher by 3 or 4 basis points, up to about a 0.67. The 30-year bond higher by 3 or 4 basis points, up to maybe a 143, 144 as we sit here. Reflects the fact that the stock market's done much better this week. A little bit of reversal of what happened. My colleague Matt will be talking about that. Also, on the Muni side, Muni yields about 15 basis points higher than Treasury yields. The important thing is that Muni yields are pretty much back to where you were at the end of February, a complete round turn. Yes, cheap relative to Treasuries, but nominally back to where they were. What does that mean going forward as we enter the second half of the year? That means you're going to see issuers really step to the plate. You're going to see issuers come to market because yields are low, yields are back where they were. So we expect to see gradually rising yields as the economy does better in the second half of the year, gradually rising yields both in munis and treasuries. We think it's good for bond market investing because slowly these credits get better. Do they need help? Absolutely. You're going to see probably more federal help. You're probably going to see an infrastructure program, as we mentioned before. Some of those infrastructure proposals include some proposals to bring back advanced refundings. We know that's important to municipalities. Also talk about a Build America Bonds program. Again, very important to municipalities for new projects, etc. All of it ties into stimulus. But today's a very good number, and we think it's a great way to go into the Independence Day weekend. And we hope you guys have a great and safe weekend as well. Thanks a lot.
Good evening. Shortened week this week with 4th of July holiday closing the markets tomorrow. Good bid all week. Healthcare strong, tech strong. Nice to see basic materials pick up a bid. As a matter of fact, we did add a basic materials sleeve to our U.S. portfolio this week, trying to take advantage of that global monetary easing. The Fed is easing, the ECB is easing, and individual Asian countries is easing, trying to move and provoke their economies. That starts at the banking level all the way down through industry, sectors, and countries. We have to be flexible enough, though, at the same time to realize that valuations in equities have taken some of that into consideration. So the key for successful investing and trading: remain flexible, remain diligent in terms of what you want to own, what levels you want to own it at. We have a saying that we use here: strong opinions, loosely held. Remaining flexible is the key to successful investing. Have a great weekend.